In this video, I'm going to be talking about smart money technique, which is SMT divergence, how to use them effectively, where to look for it in the first place. The reason I'm making this video is because I see a lot of people making videos on it online and teaching it all incorrectly, which leads to people believing that SMT doesn't work, when in reality, it actually works really good if you know what you're doing. It could be a great catalyst in choosing which pair to trade, along with a thing that you should have in your arsenal when trading. Let me begin by saying SMT is not something that gives you a trade signal to enter long or shorts. It is a catalyst for trade confirmation. It's not a signal, it's confirmation. If you have an SMT, that doesn't mean price is going to go higher or lower based only off of that. You always need narrative, bias, and a context behind why the market would do what you expect it to do. So that's the first thing that you need to know. Don't think that SMT alone will let you know the direction of the market. You have to do the work on the higher time frame first. Now, to begin with, SMT in simple words, it is a crack in correlation between two correlated pairs. For example, between Euro USD and GBP USD. So if fiber is going higher, so will the cable. And if the fiber is dropping, so the cable is melting as well. But here is where SMT comes into the picture. SMT is when, let's say, for this example here, Euro USD on 22nd of August made a low, which was taken out on 27th of August. Or when we look at GU, the correlated pair to it, 22nd of August makes a low just like EU, but it fails to make a lower low in here. So that right there is an SMT divergence. Now, what does that indicate? That means that GBP USD is the stronger pair between the two. How do you know that? Well, in this case, GU failed to take the low, which shows that it's not weak enough to sweep the liquidity below this low, whereas Euro is weaker and so it was able to take the low. Since GU was not able to do so, we are going to come to a conclusion that GBP USD was the stronger pair in this situation. So I'm going to be talking about SMT through an example from the previous week's price action of EU and GU and a trade I took on EU right here. So going into last week, I was bullish on Euro USD. I wanted to see a sweep of this buy side liquidity, initially this one, and then this one going into this CB in here. This is an hourly time frame. I wanted to see this CB to be hit. Let's just focus on this part of the price action. So I'm going to hit the replay function here. Right. This turtle soup is this low right here. And we swept these highs, so you can go ahead and mark that out as well. Right. So going into the week on Wednesday, after sweeping this low and creating this SMT, I was interested in taking a trade in EU or GU, depending on the setup as it forms. In the hourly time frame, you can see an expansion after sweeping this low and creating the SMT. I was waiting for a pullback into this M15 buy side imbalance, sell side inefficiency, but it never came through. Why? Because we had yet another SMT in here. I'll show you the M15 GU, and you can see that this is the exact M15 fair value gap that I have marked in EU. As you can see, that's 27th of August, 12:30, and in EU, that was 27th of August, 12:30. So this M15 fair value gap wasn't filled by EU, but it was filled by GU. And because of this SMT right here, I came to a conclusion that EU is the stronger pair, whereas GU isn't. All right. And also we had targets in here for GU, this buy side, that buy side, and eventually these equal highs, which we have already hit. Because of this SMT that indicated that EU is the stronger pair, I took a trade in Euro USD, targeting the relative equal highs in Asia and this M15 CB along with the hourly CB that I showed a few minutes ago. Right, I executed on an M5 time frame after a market structure shift. Right there, we dipped into this M5 fair value gap. I'm going to put this aside for a second. That was the fair value gap, the BISI, from which I took the long and targeted this low hanging objective of Asian relative equal highs, and eventually there's buy side liquidity of the pending SEBI. So we can even go down to the M1 and you can see, I hate when this happens. I know there's a setting for it, but I'm not sure where to find it, so I never really thought about it. Right. So in M1, we swept this low, going into this M1 buy side imbalance and sell side inefficiency. Took a long round after this candle closure. I was long in this candle right here. And then targeted this. I was waiting for it to hit, but it missed by a pip. My trailing stop loss was right there. Actually, it was on this candle open. So I was about to get trailed out, but then eventually I took the profits. I had a narrative, a bias that I want to be bullish this week. So that's exactly what I did. I didn't try to take shorts in here. I didn't try to scalp, bits and pieces in here. I was waiting for the A plus setup to present itself and then capitalize on it. And as you can see, it's a 1 is to 3.6, which is pretty good, right? I hope you understood the entry criteria along with this SMT, market structure shift, basic 2022 model, and then boom to the resting liquidity in here. This is a A plus liquidity, by the way. Equalize that to Asian highs. Come on now. This has to be it. And also, one thing to mention is that the execution was done in 450 to 510 macro. See that? On this candle, that's 453. Alright, I hope you understood how to use SMT with this quick video. It doesn't have to be complicated like everybody is making it to be. It was a simple trade to target resting liquidities when I had the narrative to be long for the week. And yet again, I'm telling you that I did not take this long because there was an SMT between EU and GU. That was not the catalyst. It was because my narrative and bias was long for the week. Do not complicate SMTs. Only use them with your bias because there could be several other SMTs in here, everywhere. SMTs are everywhere if you look for it. But that's the point. If you look for it in the wrong places, you're going to get stopped out. SMTs are only good if you know the direction. That will just help you in choosing which pair to take the trade on. Also, let me show you that why taking a trade on EU was advantageous for me compared to GU. Let's look at GU. This is the exact same 5-minute fair value gap if we were to enter in here. First of all, look at the RR ratio, that's 2.86 if we were to target that unfilled fair value gap M15 and hourly. On top of that, you'd have to sit through all of this price action, probably would have taken a break even in here because you would have been trading your stops. If you trailed into here, you would have taken a stop, then it would have started going higher. You might have entered impulsively in here, stopped out again. Imagine taking several losses when your narrative and bias is absolutely correct. That is where SMT helps you. That's it for this video. I'll catch you guys in the next one.